Well, hello, everybody, and welcome to another webinar we're doing to try to be more proactive in these unprecedented times. Today's webinar is brought to you by the Rising Tide Mastermind. The Rising Tide Mastermind is a group of individuals that get together regularly to help each other not only with issues, but to help all of us get further faster in all areas of life. Whether you join this group or another group, now more than ever, everybody needs a group of trusted advisors. The Rising Tide Mastermind is putting on this proactive webinar series so we can focus on what we can do and not just simply worry about things we cannot do during this unprecedented time. Our presenter today is Adam Lean, founder of the CFO Project. Adam became an accountant immediately out of college, but quickly realized it was not his calling. As an accountant, he was frustrated with not only being part of the business owners after they already happened. He shifted looking at these numbers in a more proactive way to help guide the business, thereby creating the CFO Project. Today, Adam and the CFO Project help clients with a proven system to ensure their businesses are financially solid and more profitable without being emotionally overwhelmed. Welcome, Adam.
Thank you so much, Trace. I'm really excited to be here with everybody today.
Well, this is going to be great. I know a lot of people are thinking during this time of Corona, the COVID-19, I need to look at these numbers on a regular basis anyway, but now I really need to know these numbers because I need to start making some decisions because there's so much uncertainty out there.
Yeah, and honestly, this is one of the best times to look at it because I think most people in periods of uncertainty like this, they would feel better if they had a good handle on their numbers and they had a good plan of action in order to know what to do. It's when you're sort of in the dark and you don't really understand what's going on with the business, that's when you start making sort of reckless decisions that are detrimental to the business. But if you could take this time now to work on your business and come up with an easy, has to be easy way to understand what's going right and what's going wrong in the business, then you could take steps to have a plan of action, to know what to do, to know what your team, your leadership team needs to do and focus on. And we're actually going to talk about that, how to do that today.
Well, great. Let's get started.
Excellent. So, like Trace said, this workshop is called Why Your Business Might Not Be as Profitable as It Should Be, and how to create a plan guaranteed to improve profit and cash flow. And I say guaranteed because if you follow the steps that we'll outline, you will improve your profit and cash flow. So who is this for? I mean, of course, anybody listening, the emails and the promise that this webinar made resonated with you somehow. So this is really for any business owner and their leadership team that wants to generate more cash flow and boost cash reserves. And notice that I'm talking about cash, not necessarily sales, not necessarily profit, but cash. Of course, one of the best ways to increase cash is to make a profit, and to do that, make more sales. But cash is trumps all over all others. So we're going to talk about why that is. We're also going to cover, what we're going to cover is going to give you a plan to help you work on your business, to grow your business, but at the same time to help you eliminate the confusion, eliminate the overwhelm, while giving you more freedom in your business. And so our agenda today is I'm going to share with you the 3 big challenges facing most businesses. And we've worked with and talked with thousands of businesses. And so these are sort of the 3 biggest reasons why they struggle. So we're going to talk about that and why that is. And then we're going to talk about, again, why profit is more important than sales. And then why cash is more important than profit. And then we're going to talk about the 5 steps to go from feeling overwhelmed, stressed about cash, wondering where all the money went, to feeling confident, knowing that you're running your business like a CEO with the numbers driving your decision making. And then we're going to show you our process for setting a profit and cash flow goal that will make you happy and hitting it in a year. It's super simple. You can work on it today or this weekend, but let's go ahead and get started. Just a very brief bio, just so you know who's presenting this. But like Trey said, I got a degree in accounting and got a job in private accounting. I loved where I worked. I hated being an accountant. I quickly realized because an accountant's job is to record what happened in the past, not necessarily to help the business grow. And I wanted to work in the business. So in 2006, I started a business, my own business, so that I could work in my business and work on everything, in addition to the numbers, the sales, the operations, the logistics and marketing. By 2008, I was able to quit my day job and focus on my business. But then in 2009, the business hit a wall. I was doing the things I wanted to do, being able to work in all parts of the business, but then I quickly realized I was wearing all the hats. And the one thing I was good at was understanding the numbers. And instead of letting the numbers drive my decision-making, I was wearing all the hats. I was stretched way too thin. I didn't have a plan. And I really didn't understand my numbers because I wasn't focused on them. And sales were still growing. 2009, 2010, 2011, sales were still growing, but my profit and cash flow was getting tighter and tighter every month. So that's when I sort of delegated other parts of the business and focused on the numbers. And that morphed into what we do now, which is help business owners understand their business, their numbers, and then so that they can create a plan to grow their business. All right, so let's dive into the 3 big challenges facing 90% of small businesses. Number 1, you could be making more money. Here's what I mean by that. You're making money now, so maybe you're making a lot of sales, a lot of revenue, or even you feel like you're making a lot of profit, you're profitable, but you wonder why there never seems to be enough in the bank account to pay the bills. A lot of sales coming in, but why is cash always a struggle? And of course, if payroll is coming in another week, and you have to pay insurance and your rent and marketing and all these other things. In reality, if you're dealing with that, you're dealing with 1 or 2 problems or both. Number 1, not enough profit, of course. And then number 2, not enough cash flow, meaning the money is not in the bank the day you need it. And cash flow, everybody's heard the term cash flow, but all that is you have more money flowing into the bank than flowing out of the bank. That difference is cash flow. So you want positive cash flow. You could have negative cash flow. You want positive cash flow. And so if you had a positive cash flow of $1,000 last year, you want to have more than $1,000 cash flow this year. I mean, that's really the one gauge to gauge the success of your business. Are you cash flowing more cash than last year? Now, what you do with that cash is up to you. You can pour it back into the business by hiring more employees or doing more marketing efforts, or you could take it out of the business and use for your personal use, or you can save for retirement. It doesn't matter, just as long as your business is focused on improving the cash flow. Of course, the big problem is knowing how to fix it. The second big challenge facing businesses is that you're not a financial expert, and you probably don't want to be one. You're an expert in your business. I mean, there's a reason why you're in your business. And that's because that's what you enjoy. That's what you're good at. You enjoy the operations. You probably enjoy the sales side of things. But at the end of the day, the only thing that matters is profit and cash flow. And those 2 things are numbers. They're finance related. So a lot of businesses get into trouble because they're experts at what they do. They're not experts at knowing how to improve the 2 things that matter, which is finance related. I believe that that finance is made way too complicated by the accountants, and I used to be an accountant, by the accountants and the bookkeepers and all these other finance numbers people of the world. They make it way too complicated. And it doesn't need to be. And the reason why it's complicated is because accountants, the typical accountant, and you have to have an accountant, don't get me wrong, but their job is to record the business and put it and organize the books in a fashion that to give to the IRS for tax purposes. I mean, that's really their job, is to make sure your books are recorded in a way that adheres to the IRS for tax purposes. Their job's not to record the books in a way that makes sense to you and help you improve your numbers and grow and strategize. So things get way too complicated. So I believe that it needs to be simple so that you can understand it. Then once you understand it, then you can grow the business. So when you're struggling with trying to grow a profitable business, it's easy to feel overwhelmed and confused about the next steps to be successful. Again, financial reports are downright confusing, and they don't tell you the whole story. And plus, your accountant and bookkeeper are there to tell you what happened in the past. They're not getting paid to help you improve profit, cash flow. And we'll talk about how to fix that as well in this presentation. Number 3, the third big problem facing most businesses is that you're in a catch-22 situation. Without healthy profit and cash flow, you can't get more time. However, without more time, you can't seem to get more profit and cash flow. It's a catch-22. You started this business to create freedom for yourself and freedom of money, being able to make as much as you want, and freedom of time, being able to control your time. However, when there's not enough profit, even if you're making a lot of sales, it's natural to think the way out is working harder and doing more yourself. So if you're working 60 hours a week, maybe you should be working 70 hours a week and doing more yourself. The problem is you're working in your business, not on the business. So the longer you stay stuck working in the business instead of on it, the harder it is to get unstuck. Well, how do you solve that? Well, you need more profit and cash flow. And that solves all the other problems. So you're a slave to the business when the business should be serving you. Until you begin to remove yourself from the day-to-day operations, you're going to be frustrated because you don't have the freedom that you want because you're stuck working in the business, and you don't have a business that you can ever sell. If you plan to sell your business one day, you're not going to come along with the sale. So you have to be able to replace you, first of all. And even if you never want to sell your business, you want your business to be able to not rely on you so that you could take a vacation, or you can use your business as just a way to generate cash or income without it relying on you every step of the way. So again, when you solve the profit and cash problem, it gets easy to solve the other problems in your business. So of course, the solution, let's work on profit and cash. So today I'm going to show you the 5 steps you could take to start growing your profit and cash flow so that you could finally have a business that creates the freedom and the success that you want. All right, you ready? Here's the 5 steps to keep more money and create real freedom. And by the way, these are things you can start doing today. I mean, these are very tactical, actionable things. Number 1, focus on improving cash flow, not just profit or sales. We got to start here because we got to make sure that we have the right mindset when it comes to your numbers. You got to shift from focusing on more profit as the driver of growth to focusing on more cash flow as the critical growth metric. It's not what you make, it's what you keep that matters. This is actually a quote by Robert Kiyosaki, who wrote a book called Rich Dad, Poor Dad. You may have read it. It was one of my favorite quotes. It's not what you make in terms of sales or even profit. You can make, have a $10 million business and that looks great to the outsiders, I have a $10 million business. But if you're only making keeping, a tiny bit of it, let's say $1,000, then what's the point of having a $10 million business if you're not keeping it? Your job as the business owner or a member of your leadership team is to make sure that cash is flowing in your business faster than it's flowing out. Now, here's the thing. A traditional income statement, or also known as a profit and loss statement, I think in QuickBooks, has sales less expenses equals profit. But, and this is why it's so confusing, that doesn't tell the whole story. Here's what I mean by that. Once you make a profit, so you have sales minus all the expenses equals your profit, you still got to pay your taxes, business taxes, so income tax. You still got to account for uncollected revenue. Like you could have a $1 million business in terms of profit and still have no cash flow if your clients don't pay you. You also have to account for owner withdrawals. If you take money out of the bank account for personal use or for your own payroll, and also paying down debt. Profit, your income statement doesn't include these 4 things, which takes money out of your bank account. And there's a few others we'll go through later, but these are the big 4 things. That's why your income statement doesn't tell you the full story. So it doesn't matter how much you make profit, it matters how much you keep in cash. All right. So The second big step to keep more money and to create real freedom is knowing your numbers, knowing your key numbers. So if you ever watch Shark Tank, they always say, know your numbers, you got to know your numbers. Here's a simple way to know your numbers. And then I'll show you what to do with those numbers in steps 3, 4, and 5. So all of the answers are in your numbers, yet most business owners aren't looking at the right numbers. Yes, you have an accountant or bookkeeper, but they're paid again to tell you what happened in the past and file your taxes. They're not equipped to help you find the numbers that drive your profit or tell you what to do to move the needles. There's 2 key words in here: drive your profit. You got to look for numbers that will drive the future and tell you what to do to move those needles. If you think about it, you've heard the term leading indicator or lagging indicator. An income statement is a lagging indicator that tells you what happened in the past. You need to look at the numbers that help you lead or help you change the future. Those drive future profits. So we're going to focus on that. You need to identify the right numbers to pay attention to. And then once you start understanding the numbers, you'll be able to see which numbers are preventing profit the most. And then you'll be able to do something about it. So I want to caution you, and here's another reason why the accounting doesn't really tell you, or your financials don't tell you the full story. Not all of the numbers that drive profit are on your financial reports. Nowhere in QuickBooks. So here's the 7 numbers. You can see on the right, here's the 7 numbers that drive profit and ultimately cash flow. Number 1, number of leads generated. Number 2, conversion rate. Number 3, rate of customer retention. Number 4, transactions, number of transactions. Number 5, average price per transaction. Number 6, variable costs. And number 7, fixed costs. These are the 7 drivers of cash. Okay, so let's quickly go through them real quick. Now, the number of leads, this is one of the numbers that you need to track to measure your marketing effectiveness. This is not in QuickBooks. This is something that you need to keep track of. How many leads are you getting on a regular basis? And by the way, when I say marketing effectiveness, if you're spending money on marketing, you need to make sure you have a positive return on investment. This is one of the ways to do that. You need to start measuring the number of leads, ideally by the marketing source if you can. So number of leads, number 1. Then you need to convert those leads into customers, to actual paying customers or clients. And that's called your conversion rate. Number 1, the number of leads measures your marketing effectiveness. Number 2 measures your sales effectiveness. You could get leads all day long, but if you have a horrible sales process or you just don't have salespeople on your team, you're not going to convert them. And this is also not on in your financials. Number 3, client retention rate. So how, of all the past clients that you've done business with, how can you get them to come back and buy again? Of course, we've all heard that it's cheaper to retain an existing client than it is to get a new one. So we're going to start measuring it. How can you, at what rate, if you have 1,000 clients in your database that you've already worked with, have already paid you money and trusted you, what percentage of those 1,000 people can you get to come back to do business again? Number 4, the number of transactions per client. So this measures of the clients that are buying with you, how can you get that one client to buy multiple times throughout the year? Of course, this is for driving cash flow and for repeat business. Number 5, average price per transaction. So of course, you want to get, every time your client buys something or uses your service, you want to get as high of a price that you can for that transaction. Now let me stop right here. Those first 5 numbers, leads, conversion rate, retention rate, number of transactions, and price per transaction, they all add up to revenue. And that's the first line on the income statement or the profit and loss statement in your accounting. That's why the accounting reports don't tell you the full story. Revenue is a lagging indicator. It tells you what happened. How you need to know what to do to improve revenue in the future. You need to work on these 5 numbers. One of these 5 numbers, if you work on them, will help you improve your revenue. If you work on all 5, that will dramatically improve your revenue. All right. Number 6 is the variable cost. So these are the costs that vary with your sales volume. So in other words, if you didn't have any sales, then you wouldn't have any variable costs. So what are the direct costs that you only incur when you make a sale? Those are considered variable costs. The last are your fixed costs. These are the costs that you incur regardless of your sales volume. Even if you had no sales for the month, you would still have to incur these fixed costs, like things like payroll or rent, insurance. So these are the 7 numbers that we're going to track to, and then eventually create a plan around. All right, so number 3, the third step is to create targets for each of these 7 numbers that we just went over. So now is the time to work on the business and start working less in the business. The trap that most business owners fall into is getting stuck with low profits and not enough cash flow that will free you up to keep working on the business. This is the trap that most businesses go to die. According to the SBA, the Small Business Administration, 50% of all businesses never see their 5th birthday. And by the way, a lot of profitable businesses are included in that 50% that go out of business. It doesn't matter how much profit you make. It matters how much cash flow you generate. You can have no profits and still have cash flow, and you're still in business. That's honestly how companies like Uber and Amazon.com stay in business. I mean, Amazon for the first 10 years didn't have a profit, didn't make a profit. Well, because they had cash flow, they had investors, and same with Uber, they're able to stay alive. Investors and going into tremendous debt is not necessarily prudent for most small businesses. So the best way to create cash flow is to make it yourself through profit. So there is a predictable way out, and the first step is to create targets for profit and cash flow. And I use the word target because it's a goal that you're aiming for. It's your target. You want to hit the target. Other people use, you could use terms like goals or budget. I just think target just sounds better. This is what I'm aiming for, and I want to hit it. All right, so here's how to set targets. Very simple. Number 1, using your prior numbers, set targets for each of the 7 key numbers discussed earlier. So the 7 numbers that we talked about, can you figure out what those 7 numbers were for last year? So 2019, can you figure out what those 7 numbers are? You may not know, like you may not have tracked the number of leads coming in, but just guess. Figure it out about on a daily basis or weekly basis. How many leads do you have coming in? How many approximate leads did you have last year? And so do that for the 7 numbers. Number 2, so based on that, how much profit will you realistically make this year? So if you went through the 7 numbers and you determine, what you did last year for each of these 7 numbers, you'll come to the conclusion, and I'll show you an example in a second of how much profit you'll make. Is that a realistic, based on that, if you made $100,000 profit last year, can you do that or even greater this year? And again, I'll show you an example in a second. Do you like that number? Great. So if you did $100,000 of profit and you set a target for all the 7 numbers for this year, and you come to the conclusion that you'll do $250,000 profit, do you like that number? Then great. Then those are your targets. You've figured out your 7 targets. However, if you don't like that number, you did $100,000 in profit last year, and you went through this step 1 where you set targets for each of the 7 numbers for this year, and you determine that you're only going to do $10,000 in profit, you obviously probably don't like that number. So then the answer is clear. Just figure out which of the 7 numbers have to change. It doesn't have to be all of them. Do you need to get more leads, or do you need to improve your sales conversion, or you need to get more past customers to buy from you, or you need to reduce your variable costs? Just focus on those 7 numbers. Which of those 7 have to change in order to get the target that you want? Let's use an example here. So let's say that we set targets for this year for a fictional business. So let's say that for number of leads, you want to get 48 leads for the year. And a lead I define as an opportunity to do business. So obviously not a closed customer, but it's an opportunity to do business. So if you have a referral, somebody referred you business, that would be a lead. If you had somebody calling, they Googled you, they needed a water treatment solution or some other product that you offer, and they called you, that would be a lead. So you need to figure out how many leads of those you can get. Let's say you can get 48 in a year. So essentially, one per week. Of the 48 leads, let's say that your sales team can probably convert a third of them, 33%. So you get all the leads coming in, they go to your sales team, or even you, and you realistically think you can convert a third of those leads into clients. That means you'll get 15 new clients this year. Let's also say that you have 20 clients that you service on a regular basis. You had 20 clients last month. And let's say that you can realistically retain 75% of those clients. And again, you may want to be conservative in this. But if you have 20 existing clients, or maybe you had 20 clients last year, and you think you can get those 75% of those 20 clients to buy again this year, that means you'll have 15 existing clients. So now you have 15 new clients this year, plus 15 existing clients. And then let's say of those clients, those 30 clients, each client buys from you on an average 3 times a year. So that's 90 transactions. So you have 90 transactions. And now we're going to go to the average price per transaction. Let's say your average transaction, your average service is $2,500. That means 90 transactions at $2,500 equals $225,000 in revenue. So let's say that you plan to make your target is $225,000 in revenue, and you have a 40% variable cost. So you've probably heard the term gross margin. This is just the amount of the percentage that you're going to make on each sale. So if you have 40% cost, that means you have a 60% gross profit margin. So you have $225,000 in revenue times 40% cost. That means you have $90,000 in variable cost. So to service those 90 transactions, you have to pay out $90,000 to do that. Then you have fixed costs. Let's say you have $70,000 of fixed costs this year. So now all you have to do is just simple math. $225,000 in revenue minus $90,000 in variable costs minus $70,000 in fixed costs gives us a profit of $65,000. Do you like that number? If you did $5,000 in profit last year, then yeah, $65,000 is pretty good. If we did $500,000 in profit last year, $65,000 is not so good. So of the 7 numbers, what has to change? Do you need to get more leads, or do you need to convert them at, say, 50% rate? Or do you need to get your existing clients to come and get in a higher rate, so forth? Can you get your variable costs down, say 40%? Can you get it down to 35%? All these things, those dials that you could just change to come up with a target. But let's say that 65,000 is your target. That's what we want. That's our mission. We want to aim and hit that target. Then every month, we just got to make sure that these 7 numbers are happening. So this is super simple. Create targets for each of the 7 numbers. I mean, you could do this tonight or tomorrow. Create targets for each of the 7 numbers and find out how much profit you made in the last 2 years. Based on that, and based on the targets for each of the 7 numbers, what's a realistic number to hit 12 months from now? Do you like that? Yes or no? If not, which of the 7 numbers have to change to hit the profit target that you want? And by the way, the reason why I have you look at your profit for at least the last year or even 2 years is just so you could put it in context to see if the profit number for this year is realistic. If you come up with targets for each of the 7 numbers and come up with $1 million profit goal, but you've only made $50,000 in profit the past 2 years, you're probably not going to hit that $1 million goal. It's just unrealistic. So that's why I think you need to understand what you made in profit the last 2 years. All right. Now, we talked about the fact, I need to get some water real quick. Sorry. We talked about the fact that you want to make $65,000 in profit. But here's the critical last step. You have to turn that profit into cash. So there's essentially 6 uses of cash that you have to make sure that the profit, the $65,000 profit, actually turns into cash. So we're going to briefly talk about these 6 uses of cash. The first is accounts receivable. If you make, $225,000 in revenue, but don't collect on any of it, if you don't get it from your client, then what's the point? So you've got to watch your accounts receivable like a hawk. If you sell on credit, meaning you invoice your customers after the sale's over, you need to make sure that you understand who owes you. And I would recommend you do that on a weekly basis, but maybe pick a day, Friday, and have your accountant or bookkeeper, even yourself, run a report in your accounting software. If you use QuickBooks Online, there's a report called Accounts Receivable Aging Summary. That will show you who owes you and how long they've owed you. If it's over 30, if they're 30 days past due or 90 days. But just watch that, because this is a major way businesses get into trouble. Because if you think about it, if you sold a service for $1,000, then you have to have your employees go and service the client for $1,000. You sold a job for $1,000, but now you're having to pay your employees, and you have to incur expenses and all the materials and supplies to service the job. Well, if your client never pays you that $1,000, you not only have no cash flow, you have negative cash flow, because you've had to pay money for your employees and to the supplies and materials. So this is a good way to have cash flow problems. So that's why I recommend watch your accounts receivable like a hawk. The second is inventory. So if you sell, if you carry inventory and you act as sort of a supplier to other water treatment facilities or other businesses, you carry inventory. Inventory is just cash that you've taken out of the bank and exchanged for a good that's going to sit on your shelf. So it's cash sitting on your shelf, and until you sell it, you can't get that cash back. So you want to watch how much inventory you're buying. A good way to do that is to measure the days the days in inventory. So it's a metric. The number of days the average item sits on your shelf, that's considered days in inventory. And you could also look at your inventory turnover, whichever way you're more comfortable with. But basically, you just need to figure out a good way to gauge how much inventory you have on the shelf. So if you have 90 days worth of inventory sitting on your shelf, how can you get that down to 80 days or even 40 days? Because you want to turn that inventory over as much as possible. Because until you sell that item, you're not going to get the cash to be able to do things with. So you've got to sell that item. The third use of cash that you've got to watch is accounts payable. So your vendors that you do business with, they're going to send you invoices for you to pay. Well, if it takes you 10 days to pay your suppliers, and if you have a major cash crunch, then you could theoretically wait till 30 days to pay them. And you can leverage that, just like your clients are leveraging you on the accounts receivable side. So those 3 uses, the uses of cash, accounts receivable, inventory, and accounts payable, you've got to watch because you've got to, at the bare minimum, you've got to protect your cash flow. And these 3 numbers will help you do that. The fourth use of cash, of course, is taxes. You got to pay your income tax. A lot of businesses get into trouble because at the end of the year, they've made profit. And your accountant did your taxes and says, well, you owe, $25,000 on your $100,000 profit. That's cash. That's got to come from somewhere. So you've got to budget for that as well. And the last is your debt service. So if you have a line of credit or credit cards, that's a great way to get cash. I mean, taking out loans or using debt can be a prudent way to get cash, but you got to owe that money back, and so you have to service that debt. You have to pay down debt. Well, that comes out of your bank account. It doesn't come out of the income statement. So your business can look good on paper, but the bank account tells a different story. The last use of cash is owner withdrawal. So if you take money out for your business, especially if you don't go through payroll, if your pay comes out of the bank account, then that's a use of cash that you've got to budget for. So number 4, keep score. You've got to keep score to understand your numbers and know how you're doing for each of those seven key numbers. Here's what I mean by that. You can't win the game if you don't know the score. You have to stop managing the business by the seat of your pants and start managing by the numbers. As long as the decisions are based on only your tuition as a business owner, you're the bottleneck, and you can never have freedom in your business. I mean, just quite simply, this is the reason why, sports arenas have a scoreboard. So you glance at it, you can quickly tell the what's going on with the game, whether your team is winning or losing. There's tons of stats that you can track, but nobody comes around at the basketball game and hands out, stacks of paper to the coaches and the players and the fans in the stands, whoever else, to decipher the game. You need to know immediately how well you're doing so that you can take immediate action. And that's why it's important just to track 7 numbers, create targets for them, and then just be able to look at them on a clear scoreboard so you know what's going right and what's going wrong. So again, the key is to build a scoreboard that tells you which levers to pull to increase your profit. And the scoreboard quickly allows you to quickly and easily see how well your business is doing and what's preventing it from hitting your profit target. The scoreboard also gives you an early warning system when things are going south so you can fix it, no surprises. And a scoreboard also allows you to be the owner and the leader instead of being an employee in your own business. The right scoreboard will suddenly free you up from worrying if it's all going to work out this month to knowing exactly where you stand day by day, week by week. So here's how to build a scoreboard. I mean, you could do it on a whiteboard in your office or an Excel spreadsheet. So essentially, and I'll show you an example of this, but step 1, create 8 boxes. Label each box with each of the 7 numbers plus a box for the 8th box for profit. And each box have 4 columns, 1 for months, 1 for last year, 1 for your target, and 1 for your current year. Fill in the last year and target columns for each month, and we went over that in steps 2 and 3. Figure out where you were last year. If you don't know, just sort of guess, and then come up with a target, a number for each of the target columns where you want to be. And then step 4, after each month, update the current year column for each box. So you know exactly what's working and what's not, where you're off target. Here's an example of a client. There's a real client. Of course, we mask their names, that mask the name, but we also color code it, red, green, or yellow, so you can quickly tell what's working and what's not. So if you can quickly tell that in this case, marketing and payroll expenses are the problem. They're off target. They're not hitting the target columns. They're not hitting our targets, and there are problems. They're doing fine revenue-wise, gross profit-wise. And by the way, this is not the full scoreboard. It's just a snapshot so you can see. Simple as that. Just create a simple scoreboard. It has to make sense to you. Number 5, create a plan to get more profit and cash flow. Now that you have the targets and you know your numbers, and now you've kept score, you need to create a plan to fix it, to fix the business. There are thousands of businesses that are stuck at 6 figures or low 7 figures because in sales. They can't grow leads, sales, or their team or systems because they don't have the cash to reinvest in that growth. The owner is stuck working too hard because they know there's a problem but don't know how to fix it. So once you've developed a way to keep score, you can see which parts of your business is working and which are not. And then simply create an action plan focused on what on working on those areas that are not working. So the most successful high 7-figure and 8-figure businesses have a guide to help study the numbers, build the scoreboard, and work on with the CEO to create a plan to help know which levers to pull to keep growing profitably. Here's the thing. Your guide can be somebody on your team that is more of a numbers person that you can charge to keep track of the scoreboard. It could be yourself if you feel like that's your skill set. You see somebody to help keep score, and then most importantly, create a plan to improve the business. So if you want to break through to the next level, you need someone who can help you pull together and make sense of those numbers, and then give you a plan. It's the most important piece of all of this, of the most important steps that need to be done this month to move the profit needle closer to your target for the year. Now, we've developed a proven process, and I'll show you our process here in a second, to take businesses from thin margins to healthy profits and cash flow that enable owners to gain real freedom. Here's our process, and we're called the CFO Project because we give you a CFO. And by the way, everything I just described here, having a guide, that's what a CFO does for big businesses, Chief Financial Officer. Most businesses under probably 5 million in revenue don't necessarily need a CFO, but you need somebody, whether it's somebody on your team that can do this, or yourself, or you can work with somebody like us. I mean, you just need somebody. But here's our process. We'll do an audit on your business to see what's working, what's not. We'll set targets. Together we'll help you set targets. We'll create a custom scoreboard for you, and then we'll do the most important piece. We'll actually give you an action plan of here's 2 things that have to be done right now. And we'll get on a call again the next month and do the same process all over again. Bottom line, your takeaway is that there is a predictable way to grow profit, and that profit is the key factor that enables freedom in business. Profit growth is inevitable when you understand how to move the right numbers. And when you fix profit, your business can start working for you instead of you being a slave to the business. If you work those 5 steps, you will. If you work those 5 steps and you create targets that are realistic yet a bit aggressive, then you will improve your profit and cash flow. And so you could get started working on these today. I do want to offer that if anybody just wants to get on the phone with me to just talk about their business and to see if we might can help you come up with an action plan, let me show you this slide. So, I'm willing to get on what I call a right fit call. So to find out if my team and I are a fit for you, the best thing to do is to schedule a right fit call. We'll meet for about 20 minutes and talk about your business. And if I think we're a fit, I'll explain how the process works, and we'll decide if it makes sense to continue. Here's the thing, though. I want to highlight this is that you can't become a client. We're very selective on the type of clients we take on because we want to work with businesses that we know we can help improve their profit and cash flow. And there's several ways that we figure that out. We'll help figure that out on a 20-minute call. But if you want to get on a call just to talk about your business, just to ask very specific questions, I love talking to business owners. You can go to my website, thecfoproject.com, and just /rightfit. There literally is my calendar. Just choose a day, pick a time that works for you, and we'll get on a call. Be happy to do that. But Trace, I really appreciate you letting me talk about these 5 steps. I'm very confident that if anybody does these 5 steps, they will. And this is the best time to do it because while things are slow, you can get clarity around your business so that you can take steps. You'll understand your business and know what to do to improve profit and cash flow.
Well, Adam, you're one of our trusted advisors, and we know that these numbers work. Right now, where we're dealing with this uncertain economy, I know a lot of people out there are concerned about their cash flow. So if they were to look back at the last 2 years and look at what those 7 key numbers would be, they're going to be dramatically different during this time. So is there anything different we should be doing right now based on what we would do in a normal economy?
That's a good question. And I'm going to answer it in a very cryptic way. Yes and no. uh, no, in that you shouldn't be doing it if you follow these steps, whether it's a great time or a recessed time like we're in now. You need to understand your numbers and you need to set targets so that you can understand what's working and what's not. Once you understand, then you know exactly what to focus on in the action plan. And so if regardless of how well the economy is doing or your business is doing, you have to work on the things that matter. And the only way you know what to work on, the things that matter, is if you understand the numbers, understand the business, what's working and what's not. And so it's just like building a house. If you're going to build a house, the first thing you're going to do is plot a blueprint and plot it out on paper. That's what we are doing while setting the targets. You're setting on paper what you want to happen. And then as you start executing, you can see what actually is happening and compare it to your blueprint, your targets, and see where you're off track. Now, the other part of that is the thing that you do probably should be doing more during this time, to answer your question, is focusing on things that take cash. So like accounts receivable, focusing on that, focusing on your vendors. Can you push off some of your the people that you owe? Can you work out deals where maybe you'll pay a little bit lower amount to your suppliers or even to your credit card line of credit, and then pay more later? But just protecting your cash flow, just getting more money coming in and leaving is just the name of the game right now.
Well, Adam, thanks for sharing this with us. We've recorded this so people will be able to watch it later and make some more notes. Now, you've agreed to meet with the Rising Tide Mastermind immediately after that. So we're gonna go ahead and conclude this webinar, and then we're gonna re-meet on another Zoom room so the mastermind can start asking their questions. So thank you so
Excellent.
much for coming and sharing this with us.
Of course, glad to be here.